Okay there, guys. Hi, welcome to the commodities session of Bretton Academy. Today is the 20th of June already, so in the middle of the year. Now, I do apologize for canceling quite a number of sessions in the past couple of weeks. I've not been well as you guys know, with my back and my nerves and everything else. So I've been back and forth physio and also due for another small surgery as well soon, hopefully soon, because we are battling with the coronavirus situation with vaccination and stuff like that. So we've got a lot of doctors in this small island that are also being caught up. So I'm juggling with that as well. But we will maintain as best as we can on the commodities section, the commodities session, especially with as best as I can to maintain the webinars Mondays, Wednesdays, and Fridays, because I know it's very, very essential, very important for traders. So I'll try my very best. I've also got some assistant coming through with some of my traders from the US, from the UK as well. They will also be conducting some webinars to support me as well very, very soon. So we've got some traders in Miami, we've got some traders in Spain, also in South Africa. I'm also collaborating at the moment with different groups from different brokers as well, especially in South Africa, like RMD Trader, for example. We are also collaborating with some IBs of RMD Trader in South Africa as well, so that we can actually conduct some special courses on gold specifically, like a master class in gold. Oh, give me a second. Let me just make sure the battery is up. Give me a second, guys, because it's just been alerting me about all this battery situation. Give me a second. All right. So yes, so we have RMD traders in South Africa. We've also got in Nigeria another group that are very interested in oil, gas, oil and gas, as well as gold. So I think we are getting a very good traction of traders around the world, especially my students that are gathering, even in Thailand as well. Thailand is really large with commodities, but especially gold. We've got traders. I think within brokers itself in Thailand, most of the brokers, not only local brokers, most of each one broker has, I think, about 60 to 70% of their clients respectively trading gold on a very, very high base. So we're talking about Forex trading gold, CFD trading of gold onto the MT4 or MT5 platform. So it's getting into a timing that is quite right and quite ripe for us to consider oil trading on CFDs, whether it's UK oil, US oil. Some people are getting quite excited with gas as well. But I see that commodities in general / energy market is probably one of the best to actually indulge in at this moment of time, mainly because of geopolitical reasons. We've got the right kind of scenario behind the curtains that are encouraging this whole movement of oil, energy markets, and various other things, mainly because of OPEC plus involvement with the oil, crude oil. So there's a lot of factor that I think in terms of timing will be quite good. I mean, a lot of traders might see it as, up and down, and then it's so volatile and things like that. But what we need to think about is that it's driven very highly by geopolitical reasons, politics, economics, everything meshed up together to actually have a fixed type factoring by the big boys when it comes to oil trading, whether it's UK oil or US oil. But right now, the highlight is mainly US oil and also US position in terms of controlling more than 70+% of the market transaction in US dollars. So the United States definitely has got loads of involvement in that, also with its partners. And then we've got OPEC and OPEC Plus as well. Have got a long way in terms of plans to cut down supply as well as demand to make the demand steady. And then coincidentally, we had this US-Iran sanction being lifted up. That is a very big catalyst as well. So all these things actually have happened this year. From maybe a couple of months ago, we had the pipeline, the US biggest pipeline got hacked as well. And then you've got, before that, Colombia had days and days of how you call that, strike that went on, impacted quite a lot of the oil supply as well to the United States and various other places. So all that sort of rippled, like a rippled effect, and that actually created some momentum for traders and investors to consider opportunities coming. And then OPEC came in, and then right now I want to actually give you a little bit of a pointer. I'm sorry, guys, if I am actually going back and forth with my words, is because I'm struggling a little bit with pain when the painkillers wears off, but I have to wait for a gap of 1-2 hours before I take it again. Then I'll be steady. But forgive me if my focus sometimes runs off a little bit, but I'll try my best. Okay, this is one of the challenges as traders, to actually keep and maintain our focus. So yeah, forgive me for that, but I'm okay. I'm doing much better, but I just have to go through a small surgery as well because of a slight disc that has actually gone out of place a little bit, and it's impacting the nerves at the moment. So yeah, so that's basically it. But other than that, I think I am in control. Yeah, very high dose, very high dose. And that's why I actually improved the dosage with my doctors. That's why, I need to go only higher and higher, apart from, until the surgery happens and all that, then we cut down. It got cut down already, but then didn't quite work with some type of painkillers, but I'm on a better one at the moment. It's improved quite a lot with some special physiology that I'm going through as well, alternative medicine as well. So it's improving, not bad, but yeah, sometimes I do actually struggle a bit, especially because I have to do like 7 to 10 webinars a day. That actually worsens the condition, sometimes. So yeah, that's why I have been canceling quite a number of webinars as well, but also because of other reasons, mainly with the doctors and stuff like that. Okay, so let's get going. Good morning, Bubbles. My daughter just woke up. So, okay, so let me give you guys a little bit of an update of what has actually gone on for the past 24 to 48 hours with regards to oil, especially, or commodities in general, and what has actually happened in the States. That might actually give us a little bit of pointer whether or not the trend is bullish or bearish for this week, upcoming week. Okay, so let's talk about oil, crude oil in general. When we talk about crude oil, I think the highlight is more US oil as opposed to UK oil. But then, everything is actually connected when it comes to black gold, which is crude oil. So, or the crude oil market. So with regards to crude oil, it is actually thought to be bullish in general. So you are looking at a little bit of a correction at the moment with US oil. A lot of traders are getting a little bit worried at this moment of time with regards to oil. And then traders are telling me that it's downtrend. and it's coming down, and things like that. It is true. They are partially correct. It is coming down, but it's coming down as a form of correction. I will tell you that because there's so many reasons to believe and so many reasons that has actually been confirmed as of Friday closing that I think oil will actually be more to the upside for the upcoming week as well. So we're looking at correction. We'll look at it technically as well. I'll pin down some level to show you where there are possible support, why, and all that technically. But right now, we want to talk about the fundamental, the news outside of the chart that are usually the fuel of the market to create the trend or to maintain the trend or to stop the trend. So at this moment of time, the trend is on the upside mainly because of various factors. Now, one of the factor has got to do with Federal Reserve. Now, the Federal Reserve in the United States are battling at the moment with reflation. Reflation is a version of inflation. Okay, so it's called reflation. So the reflation scenario is up at the moment, which basically means that inflation on steroids in a way. Okay, so this is going up. So what does that actually then create in terms of trend for the US oil, especially crude oil, is an increase in demand and also a reduction in supply by OPEC and OPEC plus. So what that actually means is that they have already agreed that to sort of cushion the whole scenario and to balance up things, they have to also look at what's going on in the States, a global economy and stuff like that. And now in the States, reflation is going on. So to deal with reflation, they have actually come up with cutting supply steadily, but at this moment of time, we have an increase in demand. So that has been confirmed as of last week, closing of Friday, that the demand keeps increasing. And now, for example, there is something very interesting that has just been confirmed as of last week, which is international travel normalization, which basically means that many countries, not only countries, continents, especially in Europe, have actually lifted the travel restriction. When you lift travel restriction, not only it impacts the confidence of business and things like that, it sort of gives the feeling of normalization in business. But together with that, because it's international travel, you have got the energy or oil used in planes and all that to be basically increased. So that would only be encouraging more and more prices to go bullish for crude oil in general. So that is good news in a way. So WTI and Brent, as we all know, yes, it has actually declined a little bit, but in terms of supply and demand theory in economics, usually, if you expect that prices would actually be going up, you want to actually buy at a lower price, right? So all these movements, in my opinion as well, and also looking at it technically and also fundamentally, there are more reasons to look at all this downward movement of oil currently, especially like what we are looking at this moment, as a correction and not as a trend change. So yes, it's going down, but let's not see it as going down as in going down forever. It is going down at the moment as a correction, a corrective move. So we need to actually look at it from a biggest perspective as well and try to look at where could it actually start to find support, even in the short term, long term, and all that, so that we get a better picture. So at this moment of time, let's say we are looking at oil on a 1 hour chart. You can see on the 1 hour chart, which is a neutral chart, you can actually see that you've got all this movement of oil going down, correct? But a good thing about it is that all this downward type movement, you need to look at whether or not it's got lower high and lower low. Now, at this moment of time in the 1 hour chart, you have high here, and then you've got another high here. Now, all the highs are going lower, which is basically signaling downward type movement, right? But that lower high has to be accompanied by lower low as well, then only it's confirmed that it's a downward trend. So at this moment of time in the 1 hour chart, you have high, 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 and each one high is lower than the other. Okay, so you've got a lower high, but what about a lower low? Let's see this low here and this low. Now, this low obviously is lower than that low, correct? But then when it comes to these recent ones right here, it's actually almost the same level. So at this moment, it's got no lower low so much. Okay, but then it's actually trading at the same level, finding very strong support, especially at the 70.07 area. Okay, so that is a sign that we have got no lower low, but we've got lower high. What does that mean? That means that in the 1 hour chart, it's hinting us that something is going on with the buyers. They are coming in from somewhere, but they might be coming in even more, mainly because we didn't have a lower high, but we've got a same level right here. Now, this also does actually mean this is a pattern right here. This pattern right here is a triple bottom that has actually pushed price upward. Usually a double bottom is strong pattern if you've got just 1 and 2, but you've got 3, 1, 2, and 3. All right, so more or less, I don't really trade the triple bottom and all that, but sometimes I use it as a sort of a confirmation to other patterns as well. But you just need to be aware of what is there, whether it's a high probability pattern or not. We don't know until we see the results of it. But here it looks like these touch points right here on the same level at 70.07 has actually pushed up price very strongly with a single mother candle. Okay, so that is a sign that something is going on with the support. It's finding support at this level right here. And now price is still going down. Now, what does it actually mean? What it actually means as well is that on the 1 hour chart, if it continues to go down tomorrow, it has a limit still at 70.07. Why? If it comes down here and then finds support, it's a fourth touch point of support, which basically makes it even stronger, this level of support right here. So then what we need to do as well is that for the shortest period of time, tomorrow, let's say tomorrow when the market opens, right? You need to actually look at how far this will actually fall and where is the support. So in order for us to find the support, we look to the left. But in order for us to look to the left, we need more data. So we don't actually look to the left using one time frame or a short time frame like 1 hour. I prefer to go on to the 4 hour chart, let's say, right? So here we've got the 4 hour chart. As we can actually see, sorry guys, I need to just stretch it a little bit. And basically here it's trading at 70.96 as of Friday. So Friday's price of oil, US oil, closed at 70.96. So here, for example, as it actually comes downwards, we may have some patterns as well, but we're looking at 4 hour chart right now. Now, as the 4 hour chart, we can see more data. Why I say more data is because this support right here at 70.07, I can see another support here, which basically is based on the opening price of a bullish mother candle. So what that means is that I've moved the support from lower to a little bit higher, telling you that maybe it might reverse to go up earlier, not later, meaning at the 70.35. Earlier on was 70.40 something, right? So sorry, 70.20 something or something lower. But then here it's 70.36, let's say. So this is how I look at the data and I think, okay, it could actually come here, but it also, because here we've got another mother candle that came down and then find support there. So anywhere between 70.54 and 70.36, we might find a support. But this is also quite logical if we use price action based on psychological numbers. What that means is that as it comes down, of course, we have got 70.80, right, as a psychological level. But as it comes down to 70.80, do we actually have on the left another support The answer to that is yes. We've got it at 70.90, a mother candle right there. So whether or not it will reverse there, we don't know. But most likely, if traders wants to strengthen or investors want to strengthen the uptrend, then they might want to buy lower. Also because this mother candle right here is much more powerful than that mother candle right there. Also because you see you've got a mother candle that came down here, right? And then price moved out. But then the price came down with a stronger mother candle, and then it went up with a stronger mother candle that is bullish as well. So I prefer to look at this area as a support, but you never know what the market would actually do. But most likely it might come lower to the 70.50s area. So you've got two choices now. You've got two choices whereby either tomorrow the market will start to find support at 70.80s area, okay, or 70s 50 area. I'll take that one away just to make it a little bit simpler and better. So 70.50s area right there, right? There you go. So we've got that there. So now we've got 70.80 and 70.50. These are possible support, but we want to look at that tomorrow. Okay, we'll look at that tomorrow, whether or not these are levels that it starts to bounce up from. Because of multiple long candle wicks, yes and no. That is a good pointer as well. Yes, we've got all these long wicks here that gives us a signal that it's very tough for it to go down because of price exhaustion, because of market exhaustion by sellers. Sellers have exhausted themselves to go down more. So it's left with all these wicks right here, which is a very good pointer, by the way. But I'm also looking at the mother candles area right here and how it fell with a mother candle and then rise up with another bullish mother candle. So, and together with that, right, like you said, Mr. Kunan, where you actually look at this as a area of how you call that of support as well is really powerful because of all these wicks. Now, since you say that, which is a very good thing, because for me, I'm not 100% focused at this moment of time, but then it's a good point. If we do that as a support right here, you can see that it has been locked at all this resistance right here. Previous resistance are all this support here. So this is a very good thing whereby these three lines from 70.80 right down to 70.26 now. So now because it's at 70.26, I'll adjust that line right there. Maybe I'll just draw another line, sorry. At 70.20 area. Okay, so that's a good pointer, by the way. Yeah, because this is what trading is about, to actually be, you know, getting more information, but also being alert with not missing out certain information. So it's good. Let me just see, 70.26. So what I'll do is 70.20 right there. Okay. Okay, there you go, guys. So now we know that from 70.80 right down to 70.20, especially based on the 4-hour chart, we have got support areas that we need to be aware of. What that actually means is that if you want to sell or selling, you need to sort of get out now just so that you are prepared for an uptrend move and not a downtrend move. What that means is that it's better off you guys are better off as traders, investors, to actually invest on the buy side of oil CFDs. That means to buy as opposed to sell. So I'm not looking at any selling positions at this moment of time, whether they're pending order and all that, because the trend overall, as I've read to you guys as well, is mainly to the upside, not to the downside. And we want to look at how the market performs tomorrow to actually bounce off from anywhere between 70.80 to 70.20. The lower it gets, the better. The lower it actually gets down to 70.20 and then go up from there, that actually means that you have got loads of traders and investors who wants to actually invest at a lower price of oil, or want to trade at a lower price of oil. So they've actually brought it down to a level that they are comfortable altogether to push it up. So the lower, the better. But I see the lowest to actually be at the 70.20 area, okay, for US oil. So let's monitor it first and don't get really anxious about your trades and all that. Let's look at how the market is giving us the hint tomorrow. If the market manages to pull down the price and find support here, then I would look at buying position above the 70.80. So 70.90 and above, or 71.00 and above would probably give us a lot of opportunities. Whether or not there are a lot of opportunities above 71.00 or not, we need to look to the left. Now, in order for us to look to the left at a big pictures perspective, we need more data. In order for us to get more data, we need to actually go on to higher time frame. Higher the time frame, more the data. More the data, more accurate, or I would say higher the probability of us to make a better market analysis. Okay. All right. So right. So now with the weekly chart, we can then see and look at a better perspective. Now let's look at where this wick actually landed on at 72.75. So it didn't really reach 73.30, but then it was closer to 72.75, which is 5 pips away from a psychological level of 80. Now, when you look at the whole movement right here, you can actually then look at how much more the price could actually go up before it makes that turnaround. Now, that big turnaround is going to be at this area. The last line of the box that I've drawn is at 74.13. So I am looking at 74.00 as a potential of how much price can actually go. So in my opinion, I think that this week, if the whole fundamentals that I read out can become a stronger factor or catalyst to push the oil's prices up, then we might look at it going from 72 to 73, 73 to 74, max for a while, and then maybe come down. So the upward type movement could see it going close to 74. If not, then exit at 73.90. But I must warn you guys, it's not a straight line up. Okay, it's got a lot of correction. So the correction can be big or small. We don't know that yet. But then, as you guys know, if we are looking at higher time frame and we're expecting correction, then the correction is going to be quite significant or quite big. Okay, so that is oil trading anyway, commodities in general, including precious metal as well, whereby we want to look at the fuel, the catalyst is quite clear. It's on the upside. But then in order to ride that, especially for Forex traders, Forex pairs, FX itself, currencies, then you might find it a little bit different in terms of style. Maybe some people cannot stomach that kind of risk to actually wait. But then, sometimes commodity trading is all about the waiting as well, because it is on a long type term and anything can happen at any moment of time. And that drastic change can actually be more significant compared to the other instruments that you are trading. So that's just the way it is for oil trading, okay? So that is basically it for the US oil for now, but we want to monitor. It is still in the bullish buying zone, which is in that blue area right there, okay? And this one here, we have got this blue area worked on that bullish candle that we have months ago. I think about 2 months ago, maybe a month and a half ago, I think minimum that we have identified that. And basically it's trading in within that zone right now. And that's basically what has been happening for now. So, but this area here, it's very significant resistance. Okay, you have to be very aware of that. So whatever you do, just don't leave your trades open beyond 74. Okay, your stop loss especially as well. Your stop loss shouldn't actually be in this blue zone, and that is the reason why you have to be very careful in monitoring your trade. If you are trading small, if you're trading small trader as well, you need to monitor your stop losses, because your exit is very, very important. Okay, your exit price. So for those bigger traders, you are looking at your stop loss beyond, under the blue zone. Okay, under the blue zone, not in within the blue zone. Your stop loss should actually be under the blue zone for the bigger ones, for the bigger traders especially. But for the smaller traders, yes, you have to plan it from smaller time frame as well with your stop loss. Okay, so it's probably better to have stop loss in any case, to actually have your stop loss. Okay, give me a second, guys. I think I've got questions right here. Okay. Um, okay, it's actually very obvious at the moment, Mr. Ilyas, with regards to oil drop. Now, the oil drop has got a lot to do with what been going on in two areas. Okay, one is the area of supply and demand when it comes to OPEC. All right, that is number one. All the rules and the policies and things like that. Number two is what goes on in the United States, especially with inflation, reflationary, and all the stuff with the bond and all that. So because the bond prices have actually gone up and they have got lots of positivity in certain areas, that have actually dropped the price of gold and the price of oil at the same time, right? But then this drop is quite political. It's not because something happened, it dropped. No, it's sometimes something happened, yes, in the States, and also, like I said about OPEC, but it's all sort of being planned to actually drop the price because they want to buy low. So at the end of the day, they all still have to make money in the oil because they've lost a lot already. We're talking about all these big explorers and producers of oil, you know, the big companies and all that. So because they've already gone into so much big losses, it's time for them to come up with solutions. Okay, so they are setting up in solutions as well, and they are putting it into OPEC, and they're putting it into US inflationary policies by the Federal Reserve and all that. But they're not telling us this. But the thing is that this is the reality of the situation. The reality of the situation is it's all political. It's all a game that they have to do in order for them to balance up their own books in business so that they will gain at the end of the day as opposed to lose. So there is no one reason why it drops or why it rises. It's all netted into a kind of strategy that they are all speaking behind them to actually balance up, and they will do this, and then you will see it in the news, oh, that happened. But all that is purposely made so that it can actually act as a fuel to the market for the trend that they want. Because when you see the oil drop, let's say 2000 pips, it's planned to be dropped to benefit something in within that circle. Because why? Because they have to buy very low. They want to buy very low, so they have to pull it down. Okay, so but then overall, all the things are becoming positive in travel and vaccination and everything. So it has to rise the price of oil. So in other words, they've already planned this, they've already seen what may actually happen with improved travel, improved vaccination, improved situation in the US and all that. So they know that there is an opportunity to buy more of oil because the price of oil could go up. And they are making that trend, you see. So right now, the trend is on the upside, but it has benefited a lot of people with the price that has dropped at 2000 plus pips. Okay, so yeah, it is in a way, you are right, game by the big boys, but the game by the big boys is even more when it comes to oil compared to precious metal. Okay, even more. So yeah, that's basically the way it works. Okay, all right, you guys okay now? Yeah, Ms. Elias, clear, yeah? So now what's important though for us trading from tomorrow until Friday is not exactly to know what they are doing and why, because you can never know 100%. And even if you know 100%, you can never predict the market 100% because they can change this in a matter of seconds. They can change a whole price drop that dropped 2000 pips right now and make it go up the next minute when they have decided which minute they want it to go up, you see. But we only can have a little bit of hint from the news and from what we can actually see in the window of the markets through your chart. By properly understanding price action as well, then you can actually predict. And it's not so much about predicting, it's more about controlling your risk because you want to trade, you want to enter. So that's why I say you can enter at any moment of time, but you need to know where are you going to be exiting, because your exiting is the decision maker of your profitability and your consistency, not the entering part. Because if you enter wrongly as well, then you plan your stop loss, and your stop loss would actually be stopping you from losing even more. But if you enter and you enter the wrong time, you don't have stop loss, that basically means that you are increasing tremendously your risk exposure so much that it might wipe out your whole account. So exiting does also include where your stop loss is, you see, because your stop loss is actually the only one that might help you to cut your loss earlier than expected, early than you getting into the trap of floating much bigger. Okay, so stop loss, yes, very, very important. But before you place your stop loss and all that, what's very important is where you should exit. So here, for example, like for big traders trading in the hundreds of thousands, let's say, in real money, right? They do not need to worry so much about when to enter. They can enter right now, let's say, right? And then they've got, but they have to plan their, how much they're willing to lose still. If you've got 500,000 even, they have to plan. And a lot of traders are planning, no, I just willing to lose 2,000 for that trade, for that time. They're not thinking, even though they have 500,000, they want to look at the lots they are trading, but they want to see how much they are willing to lose so that they can still keep preserving their equity, because the equity is very important. Because at some point, when you are more sure, you can actually pump in more to make much more. You see, that's why, when you have bigger capital, you can actually make even bigger money, mainly because of how you actually plan your exits. So here, for example, no matter how big the equity certain big investors have, let's say 500,000, 1 million, they are looking at, now I've advised them that you've got a cap, like a limit, okay, of how much more it can go up. Whatever you do, wherever you enter for a buy, make sure you don't leave your trade open beyond 74. Beyond 74 and below at 73.90, you limit your buy, your take profit has to be there. Your exit has to be at 73.90. Why? Because that is safe, because it is still within that blue zone that we have already analyzed. Whatever goes beyond that blue zone, we don't know yet at this moment of time. Okay, so here, for example, if we are on the monthly chart, then we can see a little bit more about what goes beyond the 74 and 00 area. So what I can actually see is that we only have, let's say, this is all we can see. This is all the price action we can actually see. How far the eyes can go to the left is based on the monthly chart. Okay, now based on the monthly chart, if, for example, something happens, pushes the price up, and then the price goes above 74, from what I can actually see, if I go to the left, go to the left, go to the left, beyond 74, I can see the first bearish candle right here. Okay, what that actually means is that if something happens, there is always a limit of where this mother candle, from where the mother candle opened the price of the sell was at 80.44, right? Now, 80.44, it's already very close to 80.50 psychological number, correct? So that basically gives me the first hint right there that if anything happens, don't get overly excited and leave your trade open and think that the oil price will go forever up. No, it doesn't happen. Even though you have 500,000, 1 million in your account, real account, I tell this to the traders and investors, you've got a limit there, and they follow. They know that that is where they have to exit. Before that, they have to exit. So exit is very, very powerful. Okay, it has to, that's the only way to actually preserve your capital, is knowing your exits very, very well, and to control your trades and not use your emotion and your guessing game. You cannot say that, okay, because I see, because I think, and because, all this guessing game. That is why I leave my trade open with no stop loss. That cannot happen. I mean, that can happen. It happens a lot, I understand, with a lot of traders, but the problem is that that is basically the downfall. The downfall is that you are using your guesses and you are guessing. And usually these guesses and this thing about, I think that is why I don't have stop loss, usually happens when you are winning. So you are driven by a little bit of greed already. So a lot of traders, when they are driven by greed, that's how they come up with all these words in their heads. I think that is why I didn't put a stop loss. I thought that because of that candle really strong, I see that there is a room there. I mean, how are we doing all this by guessing? We cannot do it by guessing. Me, I can never actually do that, mainly because I've learned a very big lesson not to actually do that guessing. I don't guess. I actually look at the chart, I look at the fundamental, and I do a checklist, not a guessing list of things in your head. Okay, whatever that you don't have evidence of it as a checklist on the paper is gambling. You're gambling the market if you're using the I think, I guess, and all that, and you don't have evidence. Like you don't look at the candles to the left, you don't use the psychological numbers, you don't go on to the fundamentals, look at some more reasons. If you don't have all that, and it's only about you saying, I guess, I think, and that is why, that is gambling the market with your guesses. Okay, so I want to make that very clear, and that has to be cut totally so that you can cut your losses. You cut your losses by the way you think, actually, much more than anything else. All right. So now here you've got a limit there. It's already given you that hint of, okay. Now, also, if I bring this level 8044 down a little bit, based on this mother candle right here, that finish right there, then I know that 78.00 is also another level. So I've forgotten about that 80 plus level that is up there. I now want to focus at this 78.00. If I study this 78.00 area as a potential resistant area, I can see it's really powerful. Firstly, it's very close to 78.00 psychological number. It's also my year of birth, which is nice. And then we've got this area right here, which is a support area. Right there, we've got another support here, coincidentally on the 78.05 area. And then we have got certain very powerful resistance right there, but it's under that area. Then we've got resistance right here. And then it's a finishing of a mother candle. So I like this area a lot, which is a 78.05. Now I polish this 78.05 again because 78.05 is very close to 78.00. So what I do then is that I will polish this to be 77.90. What does that mean? What that means is that I would advise traders, whatever you do, however excited you are, let's say if the price goes beyond 74.00 and you see this wonderful bullish candle, do not get tempted, leave your trades open, and you need to exit at 77.90, no matter whatever happens, because there's a limit there. I can see technically there is a limit there. So we do the same thing on smaller time frames with smaller distances, looking to the left, looking at patterns as well, and a couple of other things, and limit your excitement for the buy, not limit your excitement for the buy, keeping you safer and understanding where your resistance are so that you can exit. That's why my focus is more on the exits as opposed to the entries and exits, of course, but exit is your monitoring capability of your exits has to be more has to be sharper and more vigilant into that. Okay. All right, guys, any questions at all? Any questions so far? Hope it's clear for you guys on oil especially, okay? Because I know a lot of traders may be quite worried with oil going down, and they are telling me that oil is going down, it's downtrend. For me, no, we cannot just use the word downtrend when we look at the chart at one time frame, short time frame. We need to analyze it as a whole and then make that decision. And we cannot really very quickly say downtrend or uptrend. You know, for me, it is still on an uptrend. It's quite strong, and it's actually building up the uptrend for US oil at this moment of time. Okay. Okay. All right, no problem, Mr. Kunan. I think I will end as well, like very soon. So it's okay. No problems. Thank you, Mr. Kunan. Take care. Yeah. Have a good Sunday. All right, the rest of the Sunday. Okay, I'm going to be ending as well anytime soon because my pain is creeping up quite a lot right now. So I've got just about 20 minutes gap before I have my medication, my painkillers as well. So yeah, I need to also make an exit quite fast from this webinar, but then let's give it another 5 minutes or so. Anybody's got any questions, you know, can always ask, and then we'll do our best. Any questions so far, guys? No questions? All right. If you guys have got no questions, then we'll exit or we'll end this session. But then you guys can ask me more questions, direct message me or in the group, the GTI group as well, and all the other groups that you guys are in with me. You can always ask me and have that direct message on there. Okay. All right, guys. So with any questions, let me just also very quickly look into gold. Gold's the same, but I've got some plans on gold to actually, I'm just working out on short-term, medium-term, long-term as well. I've got some very interesting patterns that I have spotted. Also some nice area. I'll change all these areas as well and basically update all these things that I've drawn since last week, couple of weeks ago. And it's time for us to replan and basically have separate areas for where you can enter, where you can exit as well for gold, short, medium, and long-term trades. Very, very interesting as how oil is actually moving. I think it is actually replicating some moves as well. Not replicating, but sort of mirroring the catalyst that are driving oil prices. So I may be looking at some very interesting support levels as well. But then as we go on, since we are already on here, we could actually see that, you know, it is a straight type of fall. Sorry, guys. And basically, this area right here, we have got some bearish candle ending quite soon as well. So I think we may be looking at this level right here. And this one here is at 1727.50 area, let's say. But if I were to move this area up just a little bit right there, which is the fall area, which is also a potential support area right there, the resistant area, which could be potential support area at 1746.46. Okay, so 1746.46. I just want to look at that level, whether or not by tomorrow or anytime soon will it actually respect that level and have that level act as a support level. If it does, then we may be looking at recovery of price of shooting up of the gold as well. But then let's take a look, because I have also mentioned to you guys that this does actually look like a very nice sort of cup and handle type pattern, and usually the fall could be as low as 50%. So that 50% is roughly around here, or a little bit, let's say, higher. Let's say if I put it around here, so that 1608 area could actually be quite a significant support area, but we don't know to what extent that fall can actually be, or whether or not it will happen to that fall at 16. So we don't know that yet. So, but we just need to monitor the markets. There's a question here from Mr. Elias. How does big boys decide the gold price go down if they buy many real gold? Not really, actually, because you've got a very limited formal gold in the market. You've only got 35,000 tons of gold, and I say only because the black market gold as physical is quite a lot. So No, it does not depend on the real physical gold situation. It does actually depend on the situation, especially with US Treasury yield and the inflationary yield in the US, especially because it's the number one economy at the moment with a lot of driving factors. So a lot of price of gold is dependent on what goes on in the States, the inflation situation as well, the US dollar as well. And that's basically more a bigger chunk of what controls the price of gold. But yes, you're right as well. Whoever, controls the whole economy as a whole, the big boys that are involved in making the decisions for the US economy in general, does actually have a very, very big role on gold's prices. Okay, so that's why you have to look at US situation, USD, the US Treasury yield. That is basically what's going to go opposite the direction of gold. So if all the things that are happening with the big boys in the US is positive and pushing the US dollar up, obviously that is going to pull the gold down and vice versa. Okay, so that's basically it. Now, the big boys are also politicians, the Federal Reserve, the FOMC meeting, whoever's attending the meeting, making that decision, the Federal Reserve chairman, all the people that are involved in that, these are the big boys. These are one category of the big boys. The other category of the big boys are the hedge funds and the banks as well, but they actually have to follow and pump in all the liquidity and all that and make the trades happen only from what the big boys in the States usually, come up with. So yeah, that's basically how it works. Okay, all good. Okay, there you go. So we have got this one here, gold, that we are watching, and I want to have more of coverage on gold and various trade ideas and signals for you guys to enter and exit and plan where your stop losses are in terms of levels that we can see tomorrow at tomorrow's session. Tomorrow's session is going to be quite interesting as well. It'll happen at 9 o'clock at the same time. I try my very best, but I think it's okay. So 9 o'clock tomorrow, and we will talk about the week ahead tomorrow and presenting to you all the trade ideas as well. Okay, guys, I think I'll end the session for now, if you guys don't mind, and we'll take it from there. Any questions, you guys can just message me directly, okay, on Telegram or any others, and we will take it from there. Okay, guys, now have a great rest of the Sunday. Take care. God bless, and we'll see you guys again tomorrow. Bye-bye, guys.